Hey everyone, welcome back to the channel. It's September 22nd, 2024, and today we're diving into some key trends in both the stock market and Forex world. There's a lot going on, so let's get right into it. Let's kick things off with the stock market. It's been a bit of a roller coaster this past week. The S&P 500 closed Friday slightly down at 4,320, reflecting mixed sentiment in the market. Tech stocks are feeling the pressure, with some of the big players like Apple and Microsoft seeing minor corrections. However, energy stocks are still climbing thanks to rising oil prices. One standout has been Tesla, bouncing back from last month's dip with a 4% gain this week. They just announced a new battery breakthrough, which has investors buzzing again. Definitely something to keep an eye on in the EV space. On the Forex side, the US dollar has been flexing its muscles lately. The US dollar index, DXY, is hovering around the 105 mark, continuing its upward trend as markets brace for possible rate hikes from the Fed later this year. Inflation numbers from last week were slightly above expectations, and traders are betting on the Fed maintaining a hawkish stance. At the same time, currencies like the euro and British pound are under pressure. The euro to US dollar pair is trading near 1.0650, largely due to weaker growth data coming out of the Eurozone. Meanwhile, the pound sterling to US dollar pair saw a slight recovery after the Bank of England's rate decision, but overall sentiment remains cautious. Now, let's not forget the international markets. In Asia, China's economic slowdown continues to weigh on global sentiment. The Hang Seng Index in Hong Kong is down 2% this week, dragged lower by concerns over weak demand and ongoing real estate struggles. This is putting pressure on companies with heavy exposure to China, like Alibaba and Tencent. Over in Europe, we're seeing a similar story. The German DAX has been relatively flat, as the Eurozone battles inflation and slow economic growth. Industrial stocks have been hit hard, but there's some optimism with the European Central Bank signaling potential stimulus measures in the coming months. So, what does all this mean for traders? Well, with the Fed likely to raise rates again before the year is out, you'll want to keep a close eye on U.S. economic data. Employment reports, inflation numbers, and GDP forecasts will all play a role in shaping market direction. For Forex traders, it's a good time to monitor currency pairs tied to the US dollar. If we see more hawkish rhetoric from the Fed, the dollar could strengthen even further. This means pairs like US dollar to Japanese yen and US dollar to Canadian dollar could present some interesting trading opportunities. To wrap it up, we're heading into a pivotal time for both the stock market and Forex. With the uncertainty surrounding interest rates, inflation, and international developments, there's no shortage of volatility ahead. So whether you're trading stocks, currencies, or both, stay sharp and remember to adapt as the trends shift. If you found this update helpful, make sure to hit that like button and subscribe for more in-depth analysis. And drop a comment below if you're keeping an eye on any specific stocks or Forex pairs right now. I'd love to hear what you're watching. Thanks for tuning in, and I'll catch you in the next update. Trade smart, everyone. Don't forget to like, share, and subscribe for daily market updates.